is Pascal Bouvier. I'll be moderating this panel. Before we dive in and I ask my first question, I'd love for everyone to quickly introduce themselves and you know why the organizers as well as I was demented enough to include you in talking about bank as a service and API banking.
Hi, thanks a lot. I'm Simon Redfern. I'm CEO of Tosobi and founder of the Open Bank Project. Open Bank Project is an open source API stack for banks. Banks can install it and bring together developers and startups who want to build apps and services around and support bank as a platform. That's it. And I should have been here last year, but I was doing something else. And yeah, glad to be here this year. Great to be in Paris. And we're working with some banks in France and happy to be here. Yeah.
Hi, I'm Steve Kirsch. I'm CEO of Token. And what Token does is very similar to what Simon does. We go to banks and we say, essentially, we're kind of like what Android is for a phone, we are for a bank. So we don't just give you a very thin API layer that works on top of your bank, but we give you a very thick operating system. And we also have components that run in the cloud and at other services like businesses and consumers. So we provide a whole advanced ecosystem for open banking. So essentially, if you're a bank, we are your best friend in open banking.
Yeah, my name is Marko Wenthin. I'm one of the co-founders of Solaris Bank. What are we doing at Solaris Bank? Frankly, very often I don't know, because these are so many things. When you look around the corner, there's so many new things coming up. But when we started out, we looked at the banking industry as a whole, and not just the banking industry, but the finance industry. So we looked at this from a technological angle. So we created a tech company, seeing not just the API layer, but then the middle office, the entire core banking system. But in order to make this really function, we needed a banking license. And we got this in a very fast time. It was like 9 months. We got a full German banking license, because just without the license, just the technology doesn't work. And I couldn't be here last year because we didn't have a license back then. We were not announced, so it's just 9 months in the market. But kicking the ball into the BAAP, so business, banking as a platform arena ever since.
Good morning. My name is Nigel Verdon. I'm the CEO and founder of Rails Bank. I'm also the founder and chairman of Currency Cloud, a previous startup. Rails Bank's ambition is to give companies an API to access global banking in 5 lines of code, because we believe that global banking is better delivered as a platform that connects a network of banks together rather than a global bank. And anybody who's tried to execute a global bank has found that they essentially has never been executed particularly well. So excited to be here, and thank you for the invitation.
All right, wonderful. So I thought that we should take a few minutes to set the stage and define a certain taxonomy. After all, the title of the panel is Bank as a Service / API Banking. Most probably a lot of you are familiar or have heard various terms being bandied around in the industry. One is platform strategies, or for the first time ever, financial services incumbents have to face the fact that they have to have platform strategies, which is different than what they have used from an operational and strategic point of view in the past. Another term is open banking. Yet another is API banking. And then finally, you have bank as a service. I think that there, some overlap. Some mean something different, and it's probably good to have like some type of hierarchy of need. So either I call one of the 4 of you, or one of you volunteers to kick us off on that taxonomy.
I could maybe define what open banking means for me. So for me, open banking is really 4 things. So open standard for APIs, open source implementations, open data options. So both the banks can expose their open data, and account holders can also expose their data as open if they want to. And those 3 things drive open innovation. So that, for me, it's four things to making of open banking.
Steve?
Yeah, so the simplest way to distinguish between API banking and banking platform is that API banking is when you take your bank and you stick a very thin API on top of it, so it just makes your existing technology accessible. And when you're talking about banking as a platform, then you're talking about something much thicker. So that's the distinguishing between the two terms.
I think I would even go one step further, because this is, when we looked at this, and I've been in this industry now for a couple of years, to really see what's going on there. And when I look at what you're saying, it's you essentially still think that the banks as we know them today, with the proper technology provided, the business models as they are, they will still preserve in the future. And I think it's not like this. I'm of the opinion that there's other players coming from this side, not being banks, playing an important role in the future. So in order to thrive the banking as a platform model, not just looking at banks, existing technologies, combined with newer technologies, rather than to rethink the entire banking business model as a whole. And why would you see that bank have a monopoly on customers, on trust, on transactions, and so on and so forth? There's other companies who can provide these kind of things as good as banks can.
Sure, my sort of definition of banking as a platform is really a new type of banking P&L sitting inside a bank. At the moment in banks, you have retail banking, you have corporate banking, you have capital markets, or as the what's called a trading side, you have investment banking as capital raising. So those are all different P&Ls and operational units in the bank. We see a new type of operational unit, a new structure in a bank, which is what we call essentially a utility bank, using the rails of the bank and the safety of the bank, because banks have the sort of ability to be, or their sort of provenance in society is a place of safety, and I don't think that's going away anytime soon. So we see APIs are just access. It's just interesting. APIs just make it easier, but having a bank have a new type of capability where they leverage their rails, make that available to the world. And it's not just bank accounts and data, it's receiving money, sending money, direct debit, converting money, issuing cards, access to credit, all the complete banking set of products available via a platform or available from several banks providing it via a platform. That's what we see as banking as a platform, not just a technology piece. It's a new type of P&L operating model of a bank.
So obviously different definitions, different approaches. Either you're a service provider enabling, or you're coming up with a completely new business model. Open standards, open source is very important for this. But it seems to me that the common denominator here is the fact that the way a banking product or a banking service is going to be delivered in the future is going to be drastically different than how it has been delivered in the past, right? And if you take the example of, for example, Amazon, right? Because I won't use the word Uber and Uberization of banks. But if you take the example of Amazon or like-minded internet companies, technology companies, their business model is predicated upon bringing close to or near to zero the incremental or marginal cost of delivering a service or a product, right? So from that perspective, delivering a lending product at near zero marginal cost. And by that, I don't mean the interest rate that you're providing the lending product, but all the costs associated with delivering, fulfilling, and so on and so forth. So is that what open banking, banking as a service, or API banking pretends? Are we going towards that near zero marginal cost? And is it really a fundamental disruption of banking?
I think cost is one perspective, but when you just look at the banking industry in the last 20 years, the biggest projects which banks have been driving in the last 20 years were all cost-driven, were all efficiency-driven. Just look what happened with the ATMs and with the self-service terminals, and then with the online banking. These were all efficiency measures in order to drive the costs down of the transaction, of the costs around the customer. But what has been done in the past is actually driving the customer out of the realm of the bank, out of the reach of the bank. And that's why cost is one perspective, and I think it's extremely important, yes, but there is more than that. It is the availability, it's the easiness, especially the time to market for new products, for niche products to get there. Cost one thing, speed another.
Yeah, on the cost side, there's a fundamental issue, especially on smaller bank accounts, of an acquisition cost of $350, a lifetime value of a customer of $250. So banking smaller accounts, ex-lending, doesn't make money. But they still need the capabilities of the bank. So if a bank can leverage another distribution channel, which is primarily the fintech companies, or become a utility for others to service on top of via APIs and platform, that allows the bank to actually make money now. And if you do the economics, it works out a $4 acquisition cost per account and a $60 lifetime value of that account. But they've got to change the value chain, which is bank, fintech distribution, product, end customer, to make those economics work. And that's where we see the real value of platform is changing the economics of banking to get banking to work again for smaller customer, is where we see it from.
If I could mention the cost buzzword came up, so maybe from three angles. So if you support bank as a platform and you have an API, especially if the API is like a reasonably used common standard, then the bank can get application developers and startups to connect to their bank cheaper, because it's just a question of changing the host, basically. So that's where, and you can leverage all these amazing developers and startups around the world who want to do cool things for your bank. So you can get innovation much more cheaply. Secondly, you mentioned Amazon. I mean, if you want to use the cloud to put your platform, that's so much cheaper and faster, which is another dynamic to the cheapness thing. So, for instance, we can run up a Open Bank project instance platform, in an hour or something on Amazon. You have an answerable script. You point it at your Amazon thing, and it's up. So we can deliver like cheapness that way. And I guess thirdly, and coming from the open source angle. And using open source components as well, the bank can benefit there, because they can use open source for free or cheaper, and use back-end components cheaper as well.
So we have a pretty good knowledge of Amazon and what their needs are. Certainly they'd like a lower cost, and they'd like to escape from just being captive to the card networks. But that's only one factor. And it's not just in their shipping of the product, but it's also in paying their vendors as well. So they want to be able to essentially hold on to their cash for as long as possible. And they also want to when they make a payment, they want that payment to go to whoever it is instantly. When they ship a product, they want to be able to collect the cash instantly when they ship. And if they're shipping to government and education, they can't collect on shipment, they have to collect on delivery. And that's often delayed, and that costs them. That's cash that they don't have. They want to, as soon as UPS delivers it to education or government, they want to be able to then take the money out of your bank account and move it to their bank account instantly. So these are the things that that they can't do now with today's technology, that open banking can enable for them, if banks standardize in one way or another on the same API. Because even a large merchant like Amazon, they're not going to go and write to 100 different APIs. And right now, it's a horrible situation for everyone. It's a lose-lose, because the open APIs that have been announced, there's Fedor, there's Wells Fargo, there's Citi, and there's BBVA. All those open APIs are completely different from each other, and that's just not going to fly. The banks have to get together and standardize on a single API, or it's not going to work. It's just like with phones. There are only 2 OSs, and if you try to be the third one, you're going to lose. There's just no way that these guys are going to go for multiple APIs.
Yeah.
So it's going to be first mover advantage in this.
I think, yeah, open standards are going to be massive to make the real change in here, having the open API standards. I'll also say one thing on the APIs that all the banks seem to have been rushing out at the moment. They will give access to me as a consumer to my consumer data, my consumer stuff, but consumers never use APIs. And so there's a slightly, I think, misguided strategy to have APIs available to the consumer. The API should express other banking product, wholesale banking product, to people who can distribute that product, rather than sort of aggregators of your data and aggregators of an app to see your account in different places. It's interesting, but doesn't actually move banking forward. What moves banking forward is exposing all the different products available, account, sending, receiving money, credit, etc., available for corporates and retail, and using the API and standards as the user experience for people like Amazon, Google, and others to interact with the bank for straight-through processing, which is major. One of my investors, John Coplin, who ran Google Wallet in EMEA, when he was given a task by his boss to roll out Google Wallet in 18 countries in 6 months, he went to Citibank, and Citibank couldn't deliver on that, even though they're a global bank. So standards, ability to connect, and connect simply and fast, which everybody's been promoting, is massively important. But the banking business model behind that also has to change to become the utility bank that's distributed out, not just access my bank account, my data. That doesn't move the industry forward.
Let me rephrase the cost aspect, right? For you, and put it more in a strategic format, right? Every industry that uses technology to decrease drastically the cost of delivering something gets to see an explosion of use cases and demand, right? We've seen that in manufacturing, in logistics, in media, and so on and so forth, since the advent of the internet. I don't know if everyone is familiar with this particular data point, but over the past 100 years, the cost of intermediation of the banking industry has remained constant at 2%. In other words, for every euro that you get in or out in the system as a retail individual or as a corporation, you pay 2% to the industry. That hasn't gone down, right? That's a productivity KPI. So my question to the panel is, as this cost goes down, let's say, can it go to 0.5% or 0.4 or 0.3 or 0.2, right? Will we have an explosion, a different kind of use cases and services or innovation, which I think can be enabled by open banking, bank as a service, or because of the nature of banking and regulation, will this never happen?
Sorry, Mayor. I think this is. We have to look. I wanted to add an angle to what Nigel just said. It is. Whilst I understand the verve of opening up to a developers community and all those and delivering that, there's always still an old system behind. And that is what is fundamentally wrong. It's not the system just in IT terms, but it's the system, the legacy of how products are done, how compliance is done, how the regulators work. Because when you see just what banks take as a number one excuse for not innovating, it's regulation. And turning the table and saying, well, by automizing, by creating new product, we can have a different take on compliance. We can have a different take on what banks actually are. And I think the technology here is faster than the legacy behind. And you need to solve the underlying issues first. Otherwise, you can put as many APIs, as many developer communities on top of it. And I just said that. Yes, you can go with Citibank, and Citibank is a global bank, but try to go through the 25 hierarchies of a large global banking organization, it's not that they're stupid. It's just because this is a grown company, this is with grown levels, with grown documentation, and so on and so forth, it's near to impossible to bring this down. Now, when you ask the question about the cost, will this be, by bringing down the cost, will this create an explosion? Definitely yes, but this will not happen in the overall banking world, because in banking we have been working with technology since the 60s or something like that. It's not that this is like logistics, which have been now just a couple of years, and Amazon still does it, by the way. They're sending out a DVD, but ever since Netflix and the likes came out, you stream. So you reinvented the way the logistics work of getting your products, basically, by, for instance, in the media industry, by streaming it. In the banking industry, it was always digital. So I always had an account. This was not a box or something which I could visit. So the banks had 2 decades, 3, 4 decades of being able to provide on technology. So that's why I think it's the fundamental issues below.
Yeah, I'd just like to echo a little bit on the legacy technology. So, you know, I've heard some crazy numbers about how much these mainframes cost to maintain and set up a new version of it. Like crazy numbers, you know. And from a, you know, so I'm a geek, you know, open source guy, whatever. And but I've also done lots of Oracle, DBA stuff, and blah, blah, blah. So, you know, I know when systems should be robust and everything like that, but the cost difference between like running an open source stack and running a proprietary stack where there's maybe a handful of people in a country which knows the COBOL code or the mainframe code, that's where these massive, massive costs are, you know. And at the end of the day, these costs go to the account holders and the taxpayers probably. So I think there are real opportunities for leveraging open source, open standards, and developers and startups who are so eager to do really cool stuff, you know, at 5 in the morning, you know, and not get paid for it, or get paid for it later, you know.
One of the issues is really, the legacy is huge issue. The dilemma that every bank has is it's changing your core banking platform is like changing the wheels in your car while you're driving at 100 miles an hour. It's a massively high-risk thing to do. I think a much better strategy for driving the cost of the industry down is do the Solaris thing, Fedor thing, is have a new banking platform from the ground up, like they're doing in 10x with Andrew Jenkins' business, and either buy that bank and migrate everything out, or you create a new bank like Charles Schwab did in the brokerage business, when he totally destroyed that business, which is a transformational side you're mentioning on industries. He said, right, my best team goes and builds an online brokerage platform. I'm sorry, I own all these shopfront brokerage stores. You guys are going to lose business. I'm going to cannibalize myself. So the brave bank that cannibalizes itself and builds the digital bank from the ground up, rather than trying to stick it on to the existing core banking platform, I think is the one that's going to win. Or the bank that acquires the new types of bank, like Solaris, etc., that as they grow to be more sort of as they grow as an operation. And the challenge then is actually them migrating across and migrating legacy across. But legacy has to go. Or the new tech, getting decent tech in there, and also open source is massive. Why should the banks need proprietary technology when an account is just an account? A loan is just a loan. There's nothing fancy about it. You get more structured when you get into more complex products, but the core stuff should actually be a sort of a core open source banking platform is the nirvana, because there's no strategic advantage to a bank to actually have differentiating technology for that.
So I'm on the technical advisory board for HSBC, so I have a lot of visibility on how a very large bank operates worldwide, and I have other customers that operate differently. And so it's interesting, you know, so I can take 2 banks, both of which are the largest in their particular country, and I'll see 2 different strategies. So we're dealing with one bank that is going to create a new banking platform, and then they're going to try to migrate as many of their customers off the old banking platform onto the new banking platform. And you may think, oh, that makes total sense. All banks should do that. And it turns out that it doesn't. So at HSBC, for example, they have over 7,000 applications that are written to 50 different core banking systems. For them the cost of migrating 7,000 applications that exist, and they can't just change them because their major customers depend on those systems operating exactly the way they operate now. And the guys that built those systems, a lot of them aren't around anymore. So trying to figure out, what it does and all the nuances and make a plug replaceable version, it is just way easier to take a different approach, which is to layer some new technology on top of that and spend some time doing that. And then your new applications that you write can be written to this new API layer that works across all of your cores. And then you're not digging yourself into a deeper hole each time you write, but your new applications can then be written on top of this platform. And when you do PSD2 compliance, you can do it on top of that platform, such that you just don't dig a deeper hole. You're not trying to get rid of your existing cores, but you're not making the problem worse. And you can still get the efficiencies of cost and so forth with a new layer that runs on top, because the new layer can call the old layer for the compliance and all the other stuff that you've invested lots and lots of money in. But when you actually move the money, then you can move it in a much more efficient way using some shared ledgers and some other things that are more modern. And you're not bypassing the old stuff, but you're calling down into it, getting a response back, and then moving it between new technology to new technology. And that's the way we're seeing banks moving to open systems without disturbing the underlying infrastructure.
Okay, so what I'm hearing is actually two camps. One camp that says we can create new core banking systems. They have to be predicated upon open source lines of code, some standards that are either open or hybrid, I guess, so that we can deliver bank as a service off of these new technologies. And then I think that you basically said this is fanciful and a dream.
It depends on the bank.
In as much as, it depends on the bank, in as much as core systems, legacy core systems are an intractable issue, and it's easier to build around.
Depends on the bank.
Maybe. Okay.
Just to give some insight on HSBC, one of our investors is deputy CEO over there, and the head of innovation used to be one of my traders many, many years ago. The thing with HSBC and Citi and all these guys, there are 50 banks under one label. So the complexity of trying to fix that is huge, and I totally agree of trying to fix each one, because they're not a global bank. They're 50 banks with a logo. I think even HSBC, the cost of changing a color on something was $23 million, which is a reflection of how many sort of entities and cost base within that. So will HSBC and others still survive a global banking product? Well, it's going to be interesting. Global banking will probably only be available for the Vodafones, Lafarge, and the larger companies of the world. I can see them exiting, which they're doing at the moment. The complexity of it being operating in each country for retail and for SMEs. So the complexity is first get rid of certain banking products, then take the strategy of fixing the legacy. And there is two strategies: either fix the legacy and put code on top, or buy another bank and build from scratch. But the getting out of certain businesses, you'll see happening over the next 12 months, because people like HSBC are going to be exiting SME and retail banking in a lot of the countries at the moment.
Well, I mean, APIs, their main way is to abstract away whatever is in the back end with the cool stuff on the front, right? So I think, as the panelists said, we can have fancy new core banking technology and put an API on top of it, and that core banking could use open source, distributed ledgers, etc., whatever. Or you could just put your API layer on top of a core banking system. And that's what we're doing. And the beauty when you have the API on top is you completely abstract away the difference between the different core banking systems.
I think what I'm hearing is, from an outcomes point of view, we're going to have a barbell. It's going to be two extremes and a wasteland in the middle. One extreme is either new entrants or startups or technologists that come up with new core banking systems that enable open banking philosophies and banking as a service. And then the other extreme is large, sophisticated banks that have the wherewithal to transition from core legacy systems to new and do tinkering at the margin. Whereas all the ones in the middle might not survive. Is that what I'm hearing or not?
I mean, I think the big banks can definitely operate as bank as a platform, right? They've got all this super solid back end which just never goes down or nearly never goes down. They can put APIs on top and innovate much faster at the levels above the API, basically.
Yeah, this is. It still fundamentally comes down. There's everything is right in what Simon says. I fully agree with you. They're using the innovation which is out there, using the community by defining a common language and this maybe being the API, right? How you can develop the product, but it still is, and this is where Nigel, from my perspective, is absolutely right. But as well, when you see what Steve said, it comes down to the current complexity of a large institute. The complexities which are there, which are very often homemade and might not make sense anymore in the year 2017. That is the first thing what you have to clean out. And then you have to renovate the technology. Otherwise, it's happening. It's not that the banks have never invested in their technology, and there was always in the bank, and I've been doing banking technology for 25 years now. It's always a CTB and a RTB, so it's run the bank and change the bank systems or products and projects, etc. So there was always a lot of money being put in there, but fundamentally, it's not the IT which changes that. It's the business the business who has to change, and the business has to change with a good knowledge of the underlying technology, of the possibilities of the technologies. When you look at the management boards of large banks, how many do really have technology knowledge in their management boards, in their top level? It's old men. That's basically what it is. And very often there's maybe they had done something in the 70s with BASIC or so, but no, seriously, this is, I'm not offending anybody, I hope, but there has to be a dramatic change in how to approach the customer. And yes, everybody says customer centricity. Yes, bollocks, nobody does it actually. This is when you see the fintechs, that's where they come out. The fintechs don't care about regulation in the first place. They get kicked in the back by the regulators a year down the road, right? Then they realize that when you want to play with the big boys, you have to play to the rules of the big boys. Okay, good. Then the fintechs grow up and they team up with the banks. But what happens then? Very often, the verve and the power of the fintechs get drained down by the mighty monster which banks have become. And that's that's my firm belief. That has to change first, the understanding of how banking looks in the future, and then you can address all the fancy issues which you have in technology and business and so on and so forth.
Steve?
Yeah, I agree with that. We kind of like, when we look at banks, it kind of looks like a bell curve, that they're the early adopter banks, there are guys in the middle, and then there are guys who are going to be kind of left behind. But for HSBC, for example, they have never had a technology advisory board in the entire history of their bank. And so it was just recently that they had their very first technology advisory board meeting. And so we're starting to see changes. And normally that change is typically driven by a change in the person. So in this case, there's Andy McGuire, who's a fairly new acquisition for HSBC. He's the group COO for HSBC Worldwide. And he has just transformed HSBC's look on how they look at technology. And so I think you'll see this very slow-moving, hey, we're never the first mover. I think you're going to be, in the next 12 months, people are going to be absolutely astounded as to what happens with HSBC and technology. But to get to your barbell, I think that what you're talking about is really going to be under the covers. I think that above that, at the API level, that whether you're Fedor Bank or your HSBC or anywhere in between, that we're going to be seeing a unifying of the APIs. And they don't necessarily have to be an API that was developed by the Open Banking Working Group or some other group. We shouldn't rule out proprietary APIs that were created by a company that's been working on this problem for a long time.
I'm just saying that to change the bank is getting the right digital people engaged on the board. I think BBVA, one of the only few people has actually executed that. It's great to see HSBC now taking an advisory side. But you say that if you go into the boardroom, still the guys of very few banks understand tech in any way or form. When I grew up in the capital market side and tech in that area, and our areas of the business in the 1990s, we had tech guys leading our firms. People like Craig Highmark at Swiss Bancorp, which became UBS. And so you had the senior guys understood tech like that. People like JP Rangaswamy, people like Alnor Ramji and people. They understood tech. We radically changed the capital markets businesses and took it from screens and people waving hands on the floor like over here. And we took it and made it totally digital, totally real time, and built new sort of platforms from the ground up. But the management all understood tech. There's a message, and risk management and all the other good pieces.
I think actually that's a very important point that you're all collectively making, right? Technology is one thing, but culture is another. I can name maybe only 3 banks around the globe that are headed by technologists or former technologists. And actually these, are the ones that are the most advanced when it comes to delivering their products and services in different ways or digitizing themselves. So from that token, am I too controversial in saying that, any of the banks that just won't be able to change their culture to take advantage of technology in one way, shape, or form are basically facing their Kodak moment within the next X number of years?
The thing is, it's a lot easier to buy a new camera than to change your bank account, probably, So, actually, I've been in Athens quite a bit.
Why is that, actually?
Why is that? I don't know. You have less issues with trust if you buy a new camera, and there's plenty of places you can go into a camera shop and buy one, instantly, right? But I was recently in Athens and I saw this old Kodak building, with just a crumbling Kodak sign and so on and so forth. So I think, banks have got an easier time of it in a sense because there is this massive inertia, Like I know some very sort of forward-thinking bank creation dudes in the UK, and they still have their bank accounts with some of the big 4.
So,
yeah, but this is just, I have to say one thing, because this is when when the regulation comes in. There's the PAD, which is the account changing directive in Europe. And before in Germany, I'm German, and founded the bank, 2 banks actually in Germany, and before we said in Germany, you were much more likely to get divorced than change your bank account. I mean, this says it all. But this has changed. Why? Because the regulator actually enforced a European directive which enforces banks to make a digital and fast change of an account possible. I wouldn't do that to change my account, because for sure I would run into trouble, because I certainly would forget something, because there's so many things going to my account. That's why I wouldn't do it. I still bank with Deutsche Bank, but now that this directive has come in, I can go into services like FinReach or others, and just within 5 minutes change my account, and somebody else takes care of all of it. Then I really consider changing the bank. And the younger generation, so the millennials, they do not even consider the bank the bank. I haven't been in a bank branch for more than 5 years, so why my kids would then go for a bank branch first? They say, okay, if Snapchat it gives me the possibility to send money as well as WeChat does, well, I might as well do that. And there you go, you have an account. And that's exactly the point. It's not anymore the institution, a bank, the account, the card, everything there, my life, but it is going into the context of your life. So the things you use anyway every day, they will provide the banking services too. And why not?
Can I
So to your Kodak moment, I think that banks may look at PSD2 as, oh, this is a threat, and this is a complication, this is compliance, and this is more work. But the reality is that this is the best thing to happen to banking ever in its history. And I'll give you two analogies. One is the internet, and the other one is phones. So in the internet, when it was first invented, 50% of the CEOs thought that it would never go anywhere and couldn't figure out what it would be used for. I was there with the creators of the internet and worked side by side with them. It was back 40 years ago. And when we worked on the internet, there were two applications for the internet. It was email and FTP, so that university researchers could communicate with each other. Those were the only applications that we ever foresaw for this internet thing. And these are very, very smart guys. And they could only think of two applications for the internet. And everybody else was getting along fine without the internet. And then when the internet took off, which required the government to force universities to adopt the internet or they wouldn't get government funding, after it got kickstarted, we can't live without the internet. Another example is phones. 10 years ago, everybody had a cell phone. It was a dumb phone. It had maybe 4 lines. You couldn't imagine how you could even surf the web, which existed, towards the later years. And yet, in just 7 years, the smartphone basically wiped out every single cell phone. And it's right, like if I asked how many people still have an old-fashioned cell phone that's not a smartphone, nobody would raise their hand here.
Old men, old banking.
Yeah.
No.
So, so you looked at a complete transfer of people who were completely enthralled with technology, this cell phone technology that replaced it in just 7 years. The same thing is going to happen with open banking. Just like, when this was invented, you got 1 million apps that never existed before that nobody ever thought there would be a need for. And I still can't figure out why people need Twitter. But, there are, this is going to be transformative for the banks.
Well,
we just can't see it right now. It's hard to
let
see.
me throw a statement in the mix, and you tell me if it's underrated or overrated. The delivery of banking products and services done in a different way, more open, with different technology as a service, has already happened. The future is already here. It's not evenly distributed, right? And this is happening in China with WeChat and Alipay through different regulatory regime, different consumer behavior, and technology companies that have taken the bull by the horn and are delivering products and services already in a different way, which means that Europe, the US, other jurisdictions that are a competitive disadvantage because of that. Is that underrated, overrated?
I think it's spot on, because a place like Vietnam and everything else, when you've had no infrastructure, you can leapfrog the legacy and deliver product. And that's where China, Vietnam, Philippines, Indonesia, to some extent India, has a massive advantage over Western Europe and North America. Totally, it's spot on.
Just to come back to the regulation thing a bit, and this thing about phones were mentioned and stuff. I mean, maybe we can get, the regulators can say that we should be able to move a bank account number between any bank in the EU or something like that. Like just like now you're supposed to be able to move phone numbers between providers, right? That might help this movement of accounts around.
No, it is there.
Very shortly, 1 and 2 comments. We're up for time, so like 1 more minute, and then we have to cut off.
So anyway, I think regulation can really help in this, like encouraging openness and stuff is really good.
Well, we won't have time for a Q&A session because we're up against time, and the next panel has to start. But I encourage you, any one of you, if you're interested in that, talking with the panelists. Go to them, hound them, harass them. They've been paid handsomely to be here. And they'll answer questions.
This is it.
Thank you very much.